Hello, everyone, and welcome back to the Lobster Talks podcast by Lobster Capital. I'm your host, Gabriel Jarrosson, and today I'm actually in conversation with Laurie, who's going to be the one asking me questions about Lobster Capital. A little bit of a different episode, but packed with a lot of very, very interesting stuff. Let's dive in.
So it would be great to just hear a little bit more about Lobster Capital and your specific role. So maybe the founding story of Lobster Capital and then what you do every day as part of that.
Yes, absolutely. So I'm the general partner, the solo general partner at the head of Lobster Capital. The idea of Lobster Capital is to fund the very best YC startups. So just to back up, I started investing 11 years ago on my own. Then I got to invest with people around me who wanted access to my deal flow. And my path to YC has been my quest of better deal flow. So I started investing in France, but in France, I realized there was some very specific deal flow that was not on the platforms. So actually, going back, I started investing on the platforms, those Republic and Cedars and Crowdcube, etc. And I realized the best deals are off platform. So that was in France. And then I realized I'm investing in tech. The best deals, they're not in France. They're in Silicon Valley. And I went to Silicon Valley looking for the best deals, and I realized rather quickly some of the very best deals of Silicon Valley are in YC. So this is how I gained knowledge and approached YC. It was very difficult to get in. This may be another topic, but it's not easy to get into that community. But I did, and so that's how I got to investing in YC. But at the time, I was doing it with an angel syndicate, which was pretty large. I was able to get into many deals, but as you probably know, some companies don't want an angel syndicate. That's for several reasons. Sometimes it's a matter of branding, of what others perceive you like, but it's also a matter of syndicate takes at least a week to set up and to get the wire, where a fund can wire in a matter of hours. And those YC deals are notorious for going really, really, really fast. So this is where all of the idea for Lobster came from. I also wanted to build a bigger brand. Syndicates are somehow limited, I believe, in terms of where you can take them because you're investing with individuals. And, individuals are not going to invest with you 5-10 million at a time, where when you have a fund, of course, you can raise much, much more than that. So this is the story of me really wanting to have an impact of getting to the very best startups, funding them so they can change the world. And a fund, and so Lobster Capital, allows me to do this even better and allows me to get even better access to those deals. Because again, best deals are very competitive. If you have a fund, you're in a better position to get into those very competitive deals.
And so, just a little bit more on what led you to focus specifically on YC startups. There's this general trend around the data is out there that they're more likely to become unicorns. Was it that just led you there, or is there something more specific?
Yes and no. It's interesting. Since I've gotten some really specific numbers, and you're right, the unicorn rate is insane. It's more difficult to get into YC than to get into Harvard. And 6% unicorn rate, it means if you randomly, with your eyes closed, you pick 20 startups in YC, you get a unicorn, which, potentially that's already enough to make a great fund. Obviously, I'm trying to do much, much more than that. But at the time, honestly, it was not that much data related. I wasn't that much aware of the data. It was more, I went to San Francisco. I grew up and started my life in Paris, in France. And so I just landed in San Francisco. I was like, bonjour, I'm the French guy. And I just wanted to find the best deals, right? And I just talked to everyone. I met as many people as I could, as many people who would take my call and just give me 15, 20 minutes of their time, which many did. That's the spirit of Silicon Valley. And I was just sort of asking around, where can I find deals? What are places of deal flow? And then, incubators could be a great place to start. Okay, who are the biggest incubators? YC. And then you start seeing, wait a minute, there's Airbnb that's from YC, there's Stripe, there's, Reddit, etc. And you're like, this has got to be a very special place. So it was not that much data oriented, to be honest, which that's okay. Now it is data oriented and we have the data to back up the claim. It was more a realization that the name YC comes up so often. There's so many great companies that come from it that I kept hearing it everywhere. And I thought, this is where I got to be. It's like if you're in the startup world, in general, you keep hearing of Silicon Valley. Oh, what is this place? Silicon Valley. We just hear about it all the time. It was the same for YC. What is this YC place? It was the Silicon Valley within the Silicon Valley.
And so I just want to touch on that point where, it's the cliche in venture that all VCs have it on their website. Hey, we provide value. We're founder friendly,
Yeah.
all of this. Like, what is it that you do or that you try to do with Lobster that other investors don't do?
Yeah, you're right. Everybody says they add value. So there's really two things, or three, or whatever. One is I'm a computer science engineer. Okay, so I understand tech. I don't code every day. I code sometimes, but I understand what it's about, right? So I can understand what we're talking about. And two, I'm an entrepreneur. So I speak the language. I've been in their shoes. There's so many funds that the persons you talk to never built a business, never coded. They're just from business school and straight into the fund, which, I mean, that's okay, right? I'm not saying it's those people are terrible, but I'm saying it's probably better to talk to someone who knows what you're talking about when you're talking about code, about tech, and who's been in your shoes. So that's one thing. And people notice this very quickly about me. People tell me, just with the questions that you're asking, we realize you're an entrepreneur. That's the first thing. And then there's really two things I would say that I help them with. The first one is all that I learned while I was an entrepreneur and some very specific things, right? Because I built 7 startups, 4 failures and 3 exits, I've touched at a lot of things. I've learned a lot of things. And I'm a very passionate guy. I'm a very curious guy. So when I need to learn a new skill, I just go all in and I learn it, and then it stays forever. So I'll give you an example. My first business, I learned SEO, and I was selling wine online, which is so cliche for a French guy. So people were finding me online from SEO. And so I learned that. It's almost 10 years ago, but if you learn the real rules of providing value in an SEO article, it doesn't really change. And so this is a very specific thing. And I have several companies who are interested into SEO. I take 1 or 2 hours with the founder and I walk him through everything that I've learned. And I was lucky to learn from one of the top 10 SEO person in the world at the time, just by random chance and meeting that person. So that really helped. My second company, I cold called 10,000 people. B2B. So I went from B2C selling wine to B2B, and I just did cold calling. And so I learned all about cold calling, about CRM and optimizing either your script on the phone, but how to, follow up with people via email, via phone, etc., and just convert them. Just conversion, talking on the phone script. So this is something I can teach you if you're trying to sell to businesses. On the third business, I learned webinars. And this is the company that I mentioned that I invested in 2020, who then raised from Sequoia. I taught the founder webinars, and 90% of her new customers came from the webinars that I taught her how to do. So I taught her webinars. Today, I have one of the biggest YouTube channel in French about startup investing. And so I'm also on TikTok and Instagram, whatever. So I can teach you social media, which is really interesting. I've developed in my life and optimized around 100 WordPress websites. So I can teach you about A/B testing and optimization. Anyway, you get the point. There's so many others. So that's the main thing, very practical, applicable things that I learned in my past about starting a business, customer acquisition, getting sales, etc. That's what you do when you're a founder on a daily basis. That's the main thing. The other thing is I'm a connector. Like I said, I'm a very curious person. So I get probably 10,000. I get to look at 10,000 deals per year. So I can see what the trends are, what's going on. I have 27,000 people on LinkedIn. If you're listening to this and you're not on my LinkedIn, just come. But I have 27,000 people on LinkedIn. So I connect people together. I share. I'm passionate with startups. It's really my world. It's, I read 40 books per year, most of them about business and startups. So when I get a new idea, when I meet a new person, I connect people together. I connect ideas. I'm like, hey, look at this business. Even if I haven't invested, look at what they're doing in terms of acquisition and growth. Maybe you should do the same. Maybe I learn a new skill and then I'm going to teach it to them again because I feel life is always about learning. So helping them very practically and connector, networker, introducing. I give you just an example. A company I invested in with Lobster, they had a little more room for their fundraising, and I sent 5 emails. I was like, hey, do you want to talk to him? 5 emails, 3 of them invested. And so the founder, when I talk about my reputation at YC, the founder thought I was a god. We joked about it. He was like, you send 5 emails, I get 3 checks. It's insane. He was so happy. That's because I've been cultivating those connections for a very long time, because those funds don't have the access that I have. So they're interested into getting deals from me. So that, connecting people together. There's a business I'm investing in right now. I already connected him to 2 people and who are going to give him probably, one is going to give him 500K, the other 300K. So that's the kind of thing.
Awesome. So yeah, just it'll be cool to go back to that story around, like, let's say the first time that you get behind, the gates of YC, like that first demo day. It'd be good to hear you kind of talk your general story around that, but then also how that then you're then faced with 30 companies from the class of that batch. How then do you evaluate those companies? What are you looking for? So yeah, just go through that kind of whole. So how you get in there? What's it like when you're in there? And then what do you do now? So what?
Yeah. So I'm pretty sure the first one I got in was summer 2020. Winter 2020, I got to see some deals and make some investments, but I wasn't at the demo day. I don't remember why. Maybe I wasn't invited yet. I don't know. But summer 2020, I was invited. I was on vacation at the time in the south of France. Very cliche again, sorry. And it was in the middle of August. It was at night because it's 9 a.m. in San Francisco. So it was, from 6 p.m. to 2 a.m. or something. And I was just on vacation with sort of a bumpy internet. So I asked actually the guy ahead of time if we could go to his house. I was staying in someone's garden in a shed or whatever, go to his house, get a cable to my computer, whatever. I was so excited, obviously. And I was also very impressed. It's the first time I was, behind the curtains and I was seeing the quality of the startups. It was pretty high compared to what I used to see before. Again, because before I was seeing companies from everywhere and now you have just only YC quality. I was like, damn, this is cool. A lot of things I was interested in. Again, that was the beginning. I didn't have that reputation. And so many companies, I reached out to them and either it was too late because it was demo day and they were already oversubscribed, like I've mentioned, or they just didn't give me the time of day because that was the beginning, right? But so I saw probably around 200 startups. I guess it's the average number of companies in the batch. I don't select any companies. And that's the second part of your question. I have a selection method, very strict, very precise on top of YC. And so it's something I've been thinking a lot about for the last 11 years. Remember, my first check was 2013. It's been 11 years. It's something I've been thinking so much about, actually, that I wrote 2 books about it. They're in French. The third book probably someday is going to be in English, but that's not, started yet. But, writing a full book, 2 full books about startup investing and the criteria to select startups, it requires a lot of thinking about the topic. And not to say it was easy writing those books. Both of them were pretty difficult to write because it's a very intense and specific topic. But also because I wrote 2 books, I could talk about this for 10 hours, but I'll try to sum it up. There's a couple things I really, really try to optimize for. There's obviously the team. It's the number one thing in this business. Everybody knows that. It's pretty obvious, but I want to mention it. On this front, I'm pretty lucky because YC already really selects amazing people. So I sort of have my work cut out for me. Really good people. The second thing is I really optimize for early traction and revenue. That's because entrepreneurship is all about execution risk. You don't have a crystal ball. You don't know what they're going to do. But I found one of the best ways to predict what people are going to do in the future is to look at what they've done in the past. If you look at someone who's 45 and had an amazing career and a lot of successes, you can guess that the next 20 years are going to be amazing. If you look at someone who's 40, who's never done anything, it's quite unlikely that the next 20 years he's going to do some amazing things. It's not impossible. It's just a matter of likelihood. Remember, I'm an engineer, so I think in terms of odds. So if a company has early traction, first of all, there's more odds that they know what they're doing. They're going to keep having more traction in the future. Also, it's de-risked because they already have a product. They already know how to sell it. Apparently, it has some sort of market fit because they're growing quickly. So all of those things are really, really de-risked. And there are less chances or risks of the startup pivoting. Not that pivoting is a bad thing, but it seems that they've already landed on something that works. So early traction is what I optimize for. Again, those deals are very high profile if they're making a lot of revenue. And so they attract everyone very early. Again, that's why Lobster is pretty unique. Just to give you an example, last batch, we invested in a company who went from 0 to 1.2 million in ARR in only 6 months. So in January, they're at 0. End of June, 1.2 million ARR. That's the kind of thing I'm looking for. So team, early traction. I'm very set on scalability. So that's why I don't invest in hardware. And I want businesses that can grow their revenue without growing their costs, which is the case for many, software businesses in Silicon Valley. But I want to make sure that they can explode. Think of Airbnb, right? They have only one website to maintain. But if they double the number of bookings, they double their revenue without doubling their cost at all. Maybe, there's like $100 extra for servers, but that's it, right? So that's really, really what I'm interested in. And I want some defensibility. You're in a world where Amazon or Facebook can copy you. So I want to, if Facebook does really copy you, probably you're toast anyway, but I do want some parts of defensibility. Personally, I call it the unfair advantage. What's an advantage that you have that's unfair? in the sense that nobody else can have it. It's all going to be yours and your competitors can't get the same advantage. And the last thing, again, there's many, many more, but the last thing I want to mention is I ask the founders, okay, you have traction. How did that happen? What did you do? And how are you going to repeat and scale that? So I want that traction to be repeatable and scalable many times, especially with YC, because there's demo day, there's sort of a pressure to get early traction. Many companies manufacture a little bit of revenue. It could be, your mom, your dad, your whatever, your YC batchmates, or some stuff or it could just be you knocking on doors, which is a great hustle. I love it, but it's not scalable. You're not going to spend the next 10 years knocking on 100 times more doors, right? So I want them to have found something in terms of acquisition that's replicable at scale. Could be anything. Could be SEO that I'm good at, that I've talked about, but usually they're so early that it's too early, but I encourage them to do so. It could be social media, could be referrals, it could be ads if there's unit profitability. It could be a lot of things, but I want them to have a plan that I believe as an entrepreneur, because I've made a lot of plans and they not always work. I'm able also to cut through the BS, if you don't mind me saying so, of that answer. Someone tells me, oh, we're just going to do more ads. And then if I dig deeper, they don't have a clue of what ads and which platform and the cost and whatever. So I have some sort of a filter because I've been through it. So I want them to have somehow, it doesn't need to be perfect, right? Those guys have been in business for a couple months, but I also look at how they think about that problem. If they don't have a clue, oh, we're going to do ads, I'm like, you haven't thought this through. But even if they don't have all the answers, but I see they've, spent some time really trying to put something together, that's a really good sign. So with all of this, that's already, some very, very good steps. And then there's a burn rate and valuation and a lot of things, but those are probably the most important.
You mentioned earlier about how, YC is harder to get into than Harvard. And there's kind of a big narrative at the moment around, universities like Harvard or Yale or Oxford in the UK about how the value of those kind of degrees, those establishments are going down over time. Why do you think that the YC thesis is still relevant in 2024?
You're absolutely right. I mean, there are some people saying this for YC. YC is not what it used to be. The cohorts are too big, blah, blah, blah. So I believe that's not true for several reasons. One, YC doesn't have most of the problems that those big universities have had or still have. It's a very different world, a very different ecosystem. A lot of stuff has happened in those universities in the US and the UK in the past 2 years or 5 years that didn't happen in YC. So there's a bit of a culture shift that's been happening, but in YC, I haven't seen much of it. They're laser focused on, we want to get the best starters. That's one thing. The second thing is they took a pivot during COVID that honestly probably wasn't great. It's maybe too soon to tell. And a lot of people criticize them for this specifically, but now they've completely turned it back around. And there's actually a new boss in town, a new CEO, Gary Tan, which I've had the luck to meet. I don't know him super well yet. We've talked several times in email, but everybody has only amazing things to say about Gary. Not to say bad things about his predecessors, but Gary, everybody's just raving about him. And he's been in YC for a very long time. He knows the YC essence, and he's the reason that they took this shift away from that move at the COVID. Again, not that there was a wrong move to take at the time. COVID was a very special time, but so now it's smaller cohorts, only in San Francisco, in person, no remote, and focus on the US. They dropped all the international stuff. And there's a lot of stuff happening behind closed doors. They're focusing on early stage. They closed the continuity fund, and that's what's public. But I know for a fact that Gary's working on some stuff behind the scenes as well that are going to be very, very, very interesting for the future. So I believe the criticism was somehow valid at the time. I believe things have changed. And yes, YC cohorts are bigger. It's still around 200 per cohort. It used to be, 15 at the very beginning, but they've really scaled the model and they've hired more people. They've hired group partners. And if you look at the latest group partner who joined, I think it's David Lieb, who comes from Google Photos. It's a tool used by 1 billion people on Earth. That's a very, very strong person to have and coach you. Or you have the founder of Monzo, Tom Blomfield, from the UK, who also joined as a permanent, he was a visiting group partner, he's a permanent group partner. Again, he built 2 unicorns, Monzo and another fintech in the UK that I sadly don't remember. Maybe it's Revolut or something. I don't know. He's in 2 unicorns. Can you believe it? It's insane. There's so few of those people on Earth. And he's here helping you. So I personally believe that the value in YC is even better than it was. And that's reflected in the fact that on their website, they say 4% unicorn rate. That's the official number and they're being prudent. But internally, they actually believe it's going to be 6%. And they have some numbers already showing this. So again, I understand the criticism, but if you look at what YC really is becoming now, I think it's becoming even better. I believe the future of YC is going to be even better. Last thing I want to mention is Sam Altman, the founder of OpenAI, is the ex-president of YC. They have very, very strong ties. AI is a huge technological shift. And yes, maybe it was a little bubble in 23. Maybe it's still a little bubble today, but there's still some major, major fundamental changes happening. And they're still going to happen in the next 3, 5, and 10 years. And most of the AI founders in the world, the most talented, the most ambitious, they want to build out YC because you get so many free, you get 500K free AWS credit, and so you get OpenAI API for free, plus Google Cloud for free. I mean, anyway, it's so much easier to build there. And it's like Harvard, it attracts the most talented, the most ambitious people. So I'm very, very optimistic with the future of YC. They're at the spear of the head of the AI revolution that's happening. That's going to change many, many things in our world and in venture. Yeah, so that's a lot of reasons to be positive, in my opinion.
And so, yeah, within that, it'd be good just to touch on like that YC's emphasis on AI, because there's been criticism about how that might be an overemphasis or disproportionate to, I guess, the opportunity there. Yeah, maybe just touch on that in terms of like, there's this obviously huge proliferation of new startups and AI startups that kind of even have grown out of like an indie hacking movement. Do you think that's pulled down like the venture scale opportunity of those YC startups? Is it kind of creating this space where the YC ideas are not contrarian enough? Because if you go back to like 2015 and you think about things like Instacart or Airbnb, Uber, those are all very like contrarian ideas. Whereas now, maybe because of the volume or because of this like gathering around AI as like a core tool, how do you view that through kind of when you come to evaluate the next kind of 100, 200 companies that come up?
I honestly, personally, I agree that there's probably a little too much AI in YC. That's my take. So, I mean, 2 answers to that. One, there's not only AI, there's a lot of, but I personally have made a lot of investments in the last year outside of AI, because there's not only AI there. I've also made some investments in AI, but that's the reason why you need someone to filter for you. That's the reason why you need Lobster Capital, right? Or someone else. Lobster is obviously the best. But yes, I do believe that by getting in bigger numbers in YC, it's not 100% high quality. That's what I believe. I believe you got to choose wisely. That's why I have all of my investment criteria. That's why I'm very specific. I don't think if you choose random YC companies, or even worse, if you choose the ones that get to you as someone random that doesn't have my position there, it's really what everyone else said no to, right? It's the bottom half or the bottom 25%. Those ones I'd be sort of worry about. But the way they function is every group partner accepts their own startups. And so they've talked about this. They have so many AI startups because each group partner individually sees those opportunities and thinks, okay, this is great. This is something that's happening. You have to realize that there's so many industries that are going to be disrupted by AI, because with LLMs, you can do so much stuff that was just completely impossible just 2 years ago. And so I see now LLMs being used in so many topics, so many ways, every single industry, so many jobs. Like, I don't know the percentage, but like 30, 40, 50% of all jobs in the US, Europe, etc., could be automated or 10x in speed by AI. And so there's so much opportunity. And those group partners are thinking, where can I make a quick buck per se? Where can I just, have a company that goes fast and optimize and just grows and gets acquired? So the result is, yes, there's a lot of AI, probably a little bit too much for my taste, but by being very selective, I don't really care because I filter. But there's been some amazing AI startups as well. I've mentioned this company going from 0 to 1.2 million ARR. That's an AI startup. I've mentioned this company getting invested after me by Bessemer Venture Partners, who's also an AI company. So there's some amazing things in there as well. It's a matter of filtering. Now, again, does YC have a lot of AI? Probably. But again, the game of startup investing is you don't optimize for not having any losers. You optimize for having some very big winners. And so YC is playing that game as well. In Airbnb's batch or in Stripe's batch, the other ones are not that big, but that's okay because you got $200 billion companies that pay for the rest. So that's the game we're all playing. That's the game I'm playing with Lobster. And obviously, I'm trying to minimize the risk as well. But you're really trying to get the big wins is what you're trying to get. So the fact that some of the big winners are probably going to be in AI in the next few years, that's very credible, very possible. And this explains why there's so much AI. But again, with filtering, it doesn't really matter with my filtering.
Yeah. So I guess like the filtering thing ultimately comes down to like where most family offices or where most individual investors sit is the reality is like if a deal comes across your table, it's probably too late kind of thing for most people. And so it would be interesting to hear your take, like from a European perspective, how kind of why you advocate investing in US startups so much, and obviously YC does take international, but like if you come from a place like Station F in Paris, or recent years there have been some great startups coming out of Paris. Think about Sketchfab getting acquired in the last few years, Photo Room raising up 500 million, those sort of examples. Like why for you and for Lobster do you think this like Silicon Valley concentration, this YC concentration, like why does that thesis still hold? And then like what do you think European investors might not be understanding about why that's still the best area to be investing in?
Yeah, that's a great question. I want to mention that Photo Room is French, but they went through YC as well. So,
Yeah, of course.
and so Photo Room is a great example to talk about this because they're French founders, but they went through YC. They raised capital from the US and internationally. And their app really, really is global. It's in English from the beginning. It really is a global app. The problem with French people in general is they believe that France is the center of the world. It's actually true for Americans as well. Americans believe that the US is the center of the world. But for the US, it's a little bit more true than for France, right? In terms of the size of the economy, et cetera. And so all Europeans believe that Europe is the center of the world. So a few things. One, when I decided to go to the US, it was 2019. The French ecosystem wasn't yet what it is today. It is very true that the French and European, but it's true French in particular, probably, ecosystem is really growing and there's some very interesting stuff happening here. However, in Europe in general, and in France in particular, there are two major problems investing in startups. I mean, I don't know if there's only two, but so companies don't get too big. If you're a French company, it's very difficult to grow outside of France, Germany, UK, etc., because different countries, different regulations, different languages. In the US, you already have at least 350 million users, all of them richer than Europeans. Americans are richer than Europeans, and the chasm is only getting bigger. With one language, regulation, boom, you can launch in the US. And so very quickly you get to scale, you can go worldwide. If you're a French company launching in Germany, launching in whatever, it's difficult. It's not the same. For example, Germans pay cash on delivery, where French and Americans pay credit cards online. So that's a whole different process, right? It's not the same. And again, different regulations, et cetera. That's one thing. So you don't get that big. The other problem is there's no exits in Europe, not that many, because there are no tech giants in Europe able to acquire. Or, maybe we have ASML and I don't know, there's a German payments company, the name, it's a green, anyway, they're pretty big, but that's it. Maybe we have two giants, right? In the US, you have dozens and dozens and dozens of companies worth tens of billions who can really acquire you. You have exits in France of like 5 million, 10 million. But if you want to be acquired for 1 billion, there's not that many companies that have enough cash. Maybe there's LVMH or L'Oreal, but they're not tech companies, right? So that's a big problem. And you're thinking, well, you can still IPO. Again, there's no real stock market in France or in Europe. London is a bit different, but in France, we have those big, Total, LVMH in the stock market. But for startups to IPO, there's almost nothing. And it's a big difference. In the US, 40% of Americans own stocks. In France, it's 7% of people who own stocks. Because French people want to invest in real estate. And that's great, invest in real estate in France. That's awesome. But if you're a startup, you want to IPO. And so you're thinking, I can IPO in London, I can IPO in New York. Well, if you're a French company, you're not really able to go abroad. You're a European company, you're a French company. How are you going to IPO in New York? People don't care. People don't know who you are. So all those reasons. So we have a lot of interesting startups in France. We have a lot of great engineers, et cetera, and in Europe. But if you look at the exits, look at BlaBlaCar. BlaBlaCar is one of the most famous French unicorn ride sharing. It's huge. They're worth, 18 billion or something. It's been 16 or 18 years since their seed and no exit whatsoever. And that's the most famous unicorn. Maybe they could IPO in France. But what about the 27th French unicorn that no one knows about, even myself? How can they exit? How can they IPO? How can they get acquired? So that's a huge problem. So now you get a few French companies that exit. This Maps company got acquired by Snapchat for 250 million. It happens. But either it's a company created by French people who are in the US. You can think about Front from YC as well. We can think of Algolia. There's a lot of, created by French people who are talented, but who are global. And, I ask some French YC founders, I ask them, are you staying in Silicon Valley or are you going back to France? And if they say stay in Silicon Valley, maybe I could invest. If they go back to France, you go back into your small world. I don't know what to say. And life in France, I should know, I'm from there. Life is so good here. You have your retirement and you have social security. It's not a killer's mentality. You want killers, right? You want people who are hungry to succeed and who have ambition to build a unicorn or a decacorn. So it really is different. And Americans say this. Europe is the place to vacation and US is the place to work. That's the mentality. Is you work for 11 months and then you go spend a month in the south of France, in Italy, whatever, eat gelato, drink wine. That's what we're becoming. And I'm facing this reality. So yes, some things are happening in Europe. Yes, we have unicorns. We don't have many exits. If you look at the economies of Europe and US, there's a shift and it's growing. I don't think Europe is going to become, remember Emmanuel Macron said France is investing, I don't know, like 3 billion in AI, and Google or Amazon are investing 50 billion each. So how can you compete with, and France can't afford more. I mean, it's great that France is investing 3 billion in AI, but we're so tiny in this world. So I don't think it's gonna, Silicon Valley has a head start, has such a great advantage, and ambitious people, I've invested in Silicon Valley for 5-6 years. People are not born there. I invest in people who are born in Haiti, in Egypt, in Thailand, in China. Their dream is not to come and build a business in Paris or in London. Their dream is to come to build a business in San Francisco. And again, they'll be taking their vacation in Nice or whatever. But, there's such a brain drain in California and the US. It attracts the most ambitious people in the world. It attracted me. I'm very ambitious as well. So even though some good things are happening in France, I don't think it's going to be enough. And I think Silicon Valley has a head start. I mean, they're already creating giants in the 80s with Apple and Microsoft. So it has a 40 years head start, 45 years. What are we going to do? We're going to have a couple unicorns, play nice, have some small exits, but the real money, the real IPOs, the real acquisition. Look at, the acquisitions, LinkedIn been acquired for however billions by Microsoft. Look at those gigantic deals. They all happen in the US. There's no gigantic tech deals in Europe for the last 20 years. There's been none. So yeah, that's a bit of a long answer, but that's really sadly how I feel.
Yeah. So yeah, I guess it'd be good to wrap up on the point of, so there is kind of an increasing appetite for people generally to invest in startups. And that same kind of movement is happening somewhat in Europe. From my perspective, I'm kind of seeing it in London. But the reality is that the US market is the one that people need to be investing in. And so YC kind of offers this very simple way of framing the US startup market, because it is this kind of very high concentrated talent pool. So if I'm in Europe and I'm looking to invest in startups, it would be good just to hear, from your own perspective, how would you kind of frame the value proposition of YC as an asset class to someone in Europe? Because it can be so easily to kind of look locally for startup opportunities.
I mean, it's great to invest in your country and support people around you. That's okay. But if your goal is to make money and to maximize your gains, you got to go to the best place. I can take a parallel with sports. If you're betting on soccer or American football, you can bet on your local team at the bottom of the street. You can bet on them and see maybe they're going to win the best cup, the Champions League or whatever. But if you really want to have a chance to win and to make money, you got to bet on the biggest teams and biggest clubs. Or if you're a player and you're very talented, you can say, oh, I'm going to keep playing. If you're an amazing soccer player from Cameroon, from Senegal, you can say, oh, I'm going to keep playing in Cameroon and Senegal. Or you can say, I'm going to go to Europe because the best league in Europe, in soccer in Europe, I'm going to play in Manchester United or Paris Saint-Germain or whatever, Real Madrid or something, right? So this is the same thing. Silicon Valley, again, has a track record of providing tech giants The tech in the world that we use every day comes from Silicon Valley. The iPhone, we're using Zoom, we're using Netflix, we're using Facebook. You go somewhere, you use Uber, Microsoft, everything comes from there in terms of tech. There's no denying that. There's very, very few places in the world that had such an impact on the world, shaping the world that we have today. So Silicon Valley in itself is the best asset class. From Europe, it's quite difficult to access. That's the problem. And so that's where YC could be an answer, but it's very difficult to get to as well. And so that's where Lobster is some sort of an intermediary. And I obviously have a lot of Americans, but obviously also a lot of European as well, investors who get that access from me. So I would frame it, it's like, if you're traveling in a foreign country, you can choose a place that's random to stay, or you can choose a hotel that's recommended to you and that's 5-star. And you know that if it is a 5-star hotel, you know the level of quality that you're going to have, because you know that to get 5-star, you need to do a certain number of things. And so it's pretty much the same thing. You know that if it's a YC company, it's not a random company. It's a company that had to go through a lot of different things. And so it's some sort of an insurance of quality. That's why you sleep in a 5-star hotel instead of sleeping at a hotel that you know nothing about, because you don't know if there's bugs or if the bed is good or if there's noise or AC or something. You want an insurance of quality. And so that's what I believe YC is a promise of. And all of the numbers, all of the studies, everything backs that up. And so in my opinion, YC is actually the best place in the entire world to invest if you're investing in tech startups, because Silicon Valley is the best place, and inside Silicon Valley, the best place is YC. And you could even argue that it's the best place to invest amongst every single asset class, because startup investing is one of the most, if not the best performing asset class. It's better than real estate, better than the stock market, better than bonds, better than gold. So startups is the best. Silicon Valley is the best. Inside Silicon Valley, YC is the best. And mind you, that's the thinking I had. If I thought I could make more money for my investors in gold or in Forex trading or in crypto, I would probably be doing that. But I set out to find the best investments possible, and my quest led me to YC. Again, I'm data oriented. I'm an engineer. I look at the proof. I look at the past to try to see where the future is going to go. And this is my very best bet and my safest bet.
Yeah, cool. So I guess like to wrap up is kind of that example of, with everything that we do, we're always looking for this kind of like mark of quality. You use the example of like when you're traveling, you evaluate a hotel by this kind of like star metric. When you're looking for restaurants, you look for things like the Michelin Star guide. When you're looking to buy your car, you want to choose brands that kind of have this reputation. You can criticize those metrics as much as you want, but the reality is those products usually turn out to be better. Those hotels usually turn out to be better. So why leave something like investing to the same chance where you're not looking for those marks of quality? So that's
I love the Michelin Star thing. It's French. That's really cool. The Michelin Star is a really good comparison because it's not like a Google Maps rating of a restaurant that everyone can add. Michelin stars are
right. It's people who know exactly about it. People who
they're made by professionals, and so think of investing like eating to a restaurant. Don't think about the price, because obviously Michelin restaurant is more expensive. But here you could invest $1 million in whatever restaurant or in a Michelin star selected restaurant and see where your meal would be the best. Well, there's a lot of more odds that the Michelin meal would be the best. So that's the same for me. YC startups have been selected by professionals. And then I do my own selection as well. I'm a professional as well. So that's the Lobster selection on top of everything. But that's a great comparison with the Michelin thing.
Cool. Yeah, all right. Seems a good place to leave it.
Yes. Thank you so much. That was awesome.